It's Thursday, July 31st. Welcome to MarketFoolery. I'm Mark Reeth, and joining me in studio from Rule Breakers, Simon Erickson, and also from Rule Breakers, Dave Meyer. Gentlemen, we're just breaking all sorts of rules today.
You can't get enough of us.
Too
We're
much.
everywhere.
Oh my gosh, my head is going to explode with all the rule breaking. Earnings season is rolling on, so we've got a lot to chat about, including Yelp, Twitter, and SodaStream. But we begin with InventSense, and David, I wanted to start with InventSense because, frankly, I know nothing about this company. Tell me about the company, and why the heck should I care about it?
Well, the company makes motion sensors that go into all sorts of things, but mainly smartphones and tablets. And you should care, and others should care, because this company is taking the world by storm.
No.
Wow. Yes.
Tell me more.
It's about sales, and more sales. Don't laugh, Simon. So the company just reported earnings and beat sales expectations for the quarter. Then management followed that up with, hey, we're going to have even more sales than we thought next quarter. And then management followed that up with, hey, we're going to have more yearly sales than we thought going forward. So what's happening is we're seeing a serious adoption of their products, and the tailwind behind them is just massive. We're going to have 7.5 billion smartphones hit the market over the next 5 years. They're going to get more than their fair share of that market. And the other thing is wearables is following right behind it. In fact, production is starting to pick up for the products that are going to go into wearables markets in the future. So it's all good at InventSense right now.
Sales, sales, and sales. More sales than the Spanish Armada. So who's buying all this? Because I read, I was trying to do a little bit of research before this. I was reading about the rumor of a big a buyer for InventSense, maybe Apple?
So Apple probably is not going to be buying them. I don't see that as Apple's style in this particular instance. However, there has been a persistent rumor that InventSense is going to be a supplier of products to Apple.
Okay.
So there were literally 85,000 allusions to Apple from management in the conference call. Well, maybe not 85,000, maybe 80.
You said literally,
84,998. Okay, so I rounded up a little. But the company is definitely signaling that they believe they are a supplier. We won't know until somebody actually tears down a device. The company's not going to say anything, but odds are still looking pretty good.
Okay, so the company's at close to an all-time high. Is now an okay time to buy? Should I be waiting for that Apple announcement? What should I be doing now?
No, you shouldn't wait. This company is, like I said, gathering momentum. They are investing heavily in R&D to come out with more chips, better chips to stay ahead of the competition. They're attracting more customers. They have, again, mobile devices, wearables, and the idea of the Internet of Things. There's going to be a sensor on just about everything we have, and InventSense wants to be there to do that. So long term, this growth story is still intact. I don't really care about where the stock is relative to its highs. You want to own this company.
Sales, sales, and sales. Let's keep talking about some momentum and talk about Twitter, which just had one heck of a quarter, Simon. I mean, my goodness. Revenue, this is the big number that everyone's talking about. Revenue jumped 124%. Where the heck did that come from?
Well, obviously there's more sales in the Spanish Armada, Mark. This is another Rule Breakers pick that we really like, and like you said, operationally they're killing it. Revenue was up, driven by ad revenue, which more than doubled to $277 million. And where is that ad revenue coming from? Well, obviously advertisers want to go where the users are going. So let's track that back to the monthly active users for Twitter. Hashtag awesomeness on this. Their monthly active users increased 24%, now at $271 million. That's only the registered active users of Twitter. We think that the audience that's actually looking at tweets and is not an active user is 2 to 3 times as large as that.
I'm in that audience.
You've got the users, you've got the advertising. It's a platform for success.
Okay, now to your point, so last quarter there was a slowdown in the number of users who were on Twitter. This quarter, obviously, a big boost. When that slowdown happened, people were ready to call Twitter dead. And now this big boost has happened, and it's up, 30% in the last couple of days. There's just so much back and forth with this stock. What's an average investor to do?
Look at the long term. Let's not get caught up in the quarter-to-quarter expectations of how many percentage users we're supposed to add in this one quarter that's 3 months. Twitter is a platform that's going to take time to get those users. If we're looking at this in years instead of quarters, I think that you'll do all right.
500 million tweets a day. How many of them were yours, Dave?
Outgoing, 0.
Zero?
I'm a lurker.
Come on.
I will say I use it as for content curation. I have a lot of people that I follow, especially in the technology realm, and there's just tons of good information out there that I get every day as a result of Twitter. There's an interesting board post on the Rule Breakers boards as well. A member said, "I've been getting very specific targeted ads running through my Twitter feed." And at first I was like, oh my gosh, he's going to say they're annoying. And he said they were spot on. That's a great sign. Yeah. That's exactly what Twitter wants to do. They want to use all the information that they gather from your tweets, figure out what you're interested in, and then work with an advertiser to give the right message at the right time to the right audience. And from today, from the recent performance, they're doing it.
There you go. Simon, how many followers do you have on Twitter?
That's a goose egg, Mark.
That's a big old goose.
I'm not a Twitter user.
You're a Rule Breakers guy, but you're not even on Twitter.
I'm making more than 2,000 people very sad by not tweeting.
Come on. We're on pins and needles waiting for your words of wisdom.
Twitter shareholder, though.
Twitter shareholder, not a Twitter user. Gosh, the lurkers over here. I'm looking at my own. I'm following 300 people, but I only have 200 followers. I think that's a little sad. Follow me, fans, at Christmas Reeth over on Twitter.
Wonderful. I love your name.
I know, right?
Yeah,
a little bit of a play on words. Better than that Spanish Armada pun. All right, let's keep going with SodaStream, which just reported a pretty mixed quarter. And more than ever, it seems like a tale of two companies. You have Europe and the Middle East doing great things, and then you have the U.S. doing not so great. Why is that? Why aren't people buying SodaStream here?
Well, first of all, there's kind of a cultural difference. Europe is very big on seltzer water, which is carbonated water, it lends itself to a SodaStream-like device. So that's one thing. But just to highlight that point you made, Mark, I'm going to throw a couple numbers out here. SodaStream kind of tracks 3 different metrics when they report results. It's the number of new kits that they sell, the number of new flavor units that they sell, and also the number of gas canisters that they sell. So I'm going to compare those for just the U.S. versus the rest of the world. Let's start internationally. The number of gas canisters was up 20%, number of flavor units up 21%, number of soda-making units up 4%. Pretty strong results. You look at that in the United States, gas canisters was up 7%, flavor units was down 11%, number of soda-making units down 55%.
Ouch.
That tells the story to me right now that, this is a razor and blades model. You have to sell the razors to sell the blades. And if SodaStream really wants to crack into the U.S., they need to start selling more of these units. And to address this, the company is actually changing their advertising message. They're going to focus much more on the health benefits of SodaStream as opposed to some of the things that they've tried in the past. They are keeping Scarlett Johansson. I'm very excited about that.
Yes, thank goodness.
Thank goodness. But, again, if they really want to break into the market, I think that there's a couple things they need to change. They're doing well in the rest of the world. Let's see if they can bring it back here to the U.S.
All right. And one of the other big things surrounding SodaStream right now is this potential buyout, which boosted the stock pretty nicely these last couple of weeks, at least before this report. What's the word on that?
Rumor at this point. People familiar with the matter are throwing the rumors out there.
Always people familiar with
the matter.
How
it goes. You know how it goes. SodaStream's declining on commenting on it, but there is a rumor out there of a buyout price of $40 a share if they were to go private. Take that, as you will as investors. I wouldn't recommend making any investment recommendation because of a rumor out there, but it is something to follow.
Well, give us an investment recommendation right now. What am I to do with SodaStream?
I think SodaStream, for me, is a hold. I do think that it's a good company, and the potential is definitely there for beverages in the United States. It's a huge market. I would like to see how these new advertising campaigns and execution by management, if they're able to crack it and they do a good job, then it's definitely a buy because the market definitely supports it. But I would like to give it at least a little bit more time to see if they're going to make good with what they say.
All right. You're not a Twitter user, but you're a Twitter shareholder. Have you used SodaStream?
Used, yes. Do not own one.
Do not own one. What'd you think of it? I've never used it before.
I had no problems with it. It tastes a little different than traditional Coke, but
that is a ringing endorsement. I had no problems with it.
Meh. All right. Speaking of reviews, let's talk about Yelp, which is way down today after reporting second quarter earnings. David, what happened with Yelp?
Of course, it blew away expectations and raised guidance.
Oh, yay.
Yeah, that's exactly the opposite of what
down
we thought.
10% today?
Yeah, I honestly, I don't know what the market was looking for, but the company did report very strong numbers, both in sales, more importantly, on engagement. More people are coming to the Yelp site. It has 138 million monthly active users right now. That's it. That was a 27% increase. More importantly, they're becoming more engaged on mobile. About a little more than 50% of people are engaging Yelp through mobile, which makes perfect sense, right? When you're out and, hey, where do we go for, where do we go to get something to eat or something like that? Pop out, get out your smartphone, pop open the Yelp app, and see what's around you.
I usually pop open the Google app. What's a Yelp supposed to do against a search engine giant like Google or one of the other millions review sites out there?
So it's very interesting you should ask that because there was a recent article from eMarketer saying that the trend is not mobile search, but mobile apps.
Okay.
So here's what's happening. People are getting on their devices and they're not necessarily going to Google or Yahoo.
Or Yahoo, Dave.
Sorry, that was funny.
Ask Jeeves. Yeah.
But what they're doing is there's the apps that people are putting out are so good now that you can search very specific things, right? If I want to get something to eat, I can go to Yelp and see what's there. And the over the past year, the trends have started to reverse, meaning less search on mobile, more use of the apps to get what you want. So it's a trend that Google needs, I'm sure, is aware of,
right?
And that investors need to be aware of, especially for companies like Yelp.
The trend is Yelp's friend. Okay, so do we just follow the trend? Do we give Yelp a 5-star review? Yes.
4.5.
Oh,
no
wow.
one ever deserves a 5-star review in my book.
Harsh but fair.
Yeah, harsh but fair. I do think the company is worth buying. The other thing that they are doing is they are taking the cash flows that they're generating, and they're cash flow positive, and they're reinvesting them back in many more ways to engage not only with the user, but to make sure that they're driving a connection between the user and the business that they're supporting. This is not like a Groupon model where, quite frankly, the incentives were entirely misaligned. It's in Yelp's best interest to help its customers, the people who are buying ad packages from them. And they are doing that with things like video, message to the business, and Yelp reservations. You can make a reservation at a restaurant through Yelp now. And we're going to see that becoming, again, those types of touch points make the experience better and make the user-customer relationship a little more sticky.
Are you Yelping?
I do Yelp.
Well, you Yelp, but you don't tweet.
So
my goodness.
But again, I don't send out my reviews. I'm a lurker. I'm a user.
So you just review them for yourself?
No.
How
I use the application to figure out where I want to go. Is this a place I want to go? If I need a service, go see. Okay, here are the 4 best haircut places in the area. I use the app.
Okay.
I'm not a really big contributor to reviews.
But your
no one
thoughts
cares
out
about
there.
my opinion.
Well, I should hope not.
Wait, we're all about opinions.
Yeah, that's true. Simon, are you a Yelper?
I do use Yelp, mostly for restaurants in the DC area, which works out sometimes. Mark, I just wanted to add one thing to the eMarketer report. They're actually predicting that mobile ad revenue to grow 3 times as fast as digital ad revenue. So the focus that Dave pointed out, that people are getting on mobile more, they're using the apps more, that's definitely a trend that's in their favor. And I think it's going to work out pretty well for Yelp, actually.
Okay. Simon Erickson, Dave Meyer, guys, thanks for being here.
Pleasure, Mark. Thank you.
Thank you.
As always, people on this program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. That's it for this edition of Market Foolery. The show is mixed by Dan Boyd. I'm Mark Reeth, and you can follow me at Twitter at ChristmasReeth. That's Reeth. Thanks for listening. I'll see you tomorrow.